Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Monday, August 15th, 2016, and this is the Daily Report for Gold and Silver. Although well off the highs on the day, we do have the precious metals closing up on the day. First, we'll look at COMEX futures. This is the continuous contract based on December, trading up about $1.30 on the day at $13.4450. It's traded to a low of $13.41 if we round up, and the high on the day is $13.49. When we look at spot up about $3.50 to $4 at $13.39, the high 43, and the low on the day is $13.35. Lastly, I do want to take a look at silver, up almost 0.5% on the day, about a 9-cent gain at $19.80. So traders, obviously, we still have our active trade going. We are long gold. We went long a little bit above this particular price, roughly at $13.54, our entry price right in here. It was based upon this three-river morning star and a fairly weak confirmation, but a confirming candle nonetheless, and that was right here. And the only reason I say weak is it had a dramatic high, and it could not sustain that pricing. The following day, of course, we really had this market move into a territory that was under pressure. That followed suit on Friday with a smaller sell-off. And of course, we have our stop, which has been under $13.35. And the reason for placing our stop at this particular price point, of course, is to cover these lows. My sense that even if the market consolidates, as long as it does not make a new low or a lower low, in other words, trade or track under $13.35, we still have a decent probability that this market will find support and will begin to trade higher from this particular price point. Also, traders, there is something that I have noticed over the last couple of trading days as we have seen this market really consolidate. And really what we're seeing is, take a look at these highs up here. And so we've had these series of really lower highs. And so we can absolutely put a trend line in here that works with a series of lower highs. We can also look at the series of higher lows. And the fact of the matter is, we are back in some sort of a compression triangle. And of course, as you know, my sense is that as it reaches the apex of this triangle, there will be a release of energy. The energy being stored, because it's trading within this tight range, it kind of winds it up like you would wind up a spring clock. And then when it breaks, you get that release of energy. Typically, the market will release in the predominant trend direction, which I believe is up. So I would expect that spike to go up. But I also believe that because I believe we're in this final fifth wave, and so that if it does break, I would expect a break to the upside. Nonetheless, we do have a actual market that has a consolidating set of highs, consolidating set of lows, and the characteristics are that when we look at the most recent lows in the market, we have seen this market have a set of higher lows. If we look at all of these last lows on these subsequent rallies, they've all been higher, and that's real positive. When we look at the highs, we did have a couple of series of higher highs, but then we had this equal high on this last rally here. We did not get a higher high, and so to complete really the rally in the way that we have seen it move, it really necessitates at this point that we break above 1370 and we actually get a higher high. If we do not, we have to go back to the drawing board, so to speak, because the models we're looking at do not eloquently cover the factual price movements that we're watching in the market, and we'd have to adjust it. But as for now, my recommendation is to maintain your current long position, maintain your current stop. And traders, lastly, do want to take a look at this daily chart. This in Japanese average format. I'm attempting to gauge any kind of strength that we have and any kind of defined trend. We certainly aren't seeing a defined trend. If anything, we're getting alternating candle color. We've got two green, we've got two red. I also believe that we have support right in this area at about 1340. Now, that is, of course, based on a Japanese average chart, which has a different way of drawing the opens because the opens are based upon the midpoint of the prior candle. I still see resistance up here at 1370, and it's based upon this former top. Lastly, or not lastly, but second to last, we can easily identify this compression triangle that we talked about. And then lastly, I do have two moving averages here. We've got a shorter term 13-day, a longer term 30-day, and you can absolutely see that they are really moving apart. Moving apart gives some sort of a emphasis to any kind of upside momentum that might build. And so we'll have to see. As I said, we are quickly approaching the apex. I would expect a release of energy or a decent move upon the point in which price gets to that apex. And I also expect that move to be a break to the upside. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.